Hello everyone, welcome back to my video. Today I will be talking about the three different sessions we have in the market, and we'll also talk about liquidity. So in the market we have three different types of sessions. We have the Asia session, which you'll find that price tends to be slower, more consolidating, not much activity is going on. But then what happens is during London session, this is where more volatility enters the market and a lot more price action is happening. You will find that price will sweep out of the Asia high or the Asia low. In this example, we will be using the Asia high case. So your price will sweep Asia high. People will call this the manipulation or the London reversal, because what happens, it then reverses, continuing the trend. But then during New York session, what you'll find is price pulls back for a continuation of that trend, because New York also has a lot of volatility entering the market, same as London. So depending on what type of trader and which country you live in, the London or New York session has the highest volatility, and that's the sessions you probably most likely want to trade, because as I mentioned, the Asia session is mainly just consolidating, and there's stop losses and liquidity above Asia high and below Asia low. So those are the three different types of sessions. I will now be talking about liquidity. So when I got introduced into liquidity, I've learned many different types of concepts of liquidity. I've learned double tops. I've learned triple tops. I've learned trend line liquidity, whether that's a bullish trend line or bearish trend line, because what happens, price trends upwards and eventually breaks downwards, and they call that the liquidity. Or price is trending downwards and then we get a breakout for buy there. Or we have session liquidities, whether you call that Asia session liquidity, the high or the low, or the London high or the low, or the New York high and the low. And then you have previous swing levels, which are liquidity, because the protected levels are liquidity. Technically, the whole market is liquidity. And this was the issue I had, was when I was learning with mentors, they taught me all these different types of liquidities, and they never really told, which liquidity you should be using. They just said, just take all of them and, trade all of them. This is a very discretionary approach. And the right method is that all liquidities actually work, but you have to collect the data on them. And to collect the data on every single one of them is very, very annoying and a long process. So instead of trying to collect the data on all of them, I've only stuck to one type of liquidity, which I use the Asia session high or the low liquidity. This makes trading very, very simple and easy, because all I'm doing is concentrating on the Asia high or the Asia low. Whatever side gets swept, I know the liquidity is taken, and I'm now looking for a reversal or a continuation. That's it. I don't need any other type of liquidity. I just focus on the Asia high or Asia low. I don't care about equal highs, equal lows, or trendline liquidity. This adds so much confusion and discretionary opinion to your analysis, and then you don't even have any real data unless you collected the data. But like I said, to collect the data on every single liquidity is going to take you forever. So I stick with Asia high and Asia low in simple concepts. Now, let's look at real life chart example. I've actually taken a beautiful trade on Euro USD on Friday, which was recently. And the beauty about this trade, if I turn on my indicator here, is in this trade example, I was looking for a buys. And as you can see here, I had a bullish breaker structure here. Price made an impulse move up, and then we started pulling back. Now this blue box here is my Asia session. You got Asia high here, and the bottom of it was Asia low. And as you can see here, price, when London started, swept the lows of Asia. And then we've tapped into this demand zone. I entered a buy for 3R TP, aiming for the continuation up. And that's TP hit above Asia high. And we went even further. For another case example, I think I took a trade on USD JPY this week as well, which we had that Asia reversal right here. Price was bullish breaker structure. Blue box is Asia session. We've got Asia high here. And we have Asia low here. And what happened? Price swept Asia low, tapped into the demand zone in a bullish trend, and we entered on a lower time frame confirmation, targeting Asia high. And that's it. I don't need to focus on any other liquidity apart from Asia high and Asia low. And like I said, during London session, I'll wait for out of Asia high or Asia low to be swept and reverse on the lower time frame back in the main pro trend direction. Now let's look at a case where it didn't work. So I took a trade on AUD USD here this week as well. I saw price was trending bearish. In this case example, we had Asia high here, and we've had Asia low here. So in this case example, I was looking for shorts. Why? Because I saw price was trending bearish here. To me, this is bearish, lower highs, lower lows, lower highs, lower lows. During Asia session, lower high, and then we broke out lower low here. So because we swept Asia low, I was now looking for bearish continuations for a short, hoping that it would come down here. But in this case, it didn't play out. But was the trade valid? It was 100% valid. Why? Because we were in a bearish trend. We swept Asia low, and I was just looking for that pullback and lower time frame continuation. But in this case, it didn't complete it, and it just reversed up. And that's the game of trading, is that not every setup is going to play out. But the main point I'm trying to make is that I'm focusing on the London session or the New York session, but the only liquidity that I am using is Asia high or Asia low. And it's either going to be a continuation, or I'm going to be looking for a reversal. But when I say a reversal, I'm saying a reversal in line with the pro trend. So I hope this makes it very clear about the three different types of sessions. The liquidity I use, Asia high and Asia low. Like I said, you don't have to use Asia high or Asia low. You can use any liquidity you want in the examples, or any liquidity that you've learned. Previous day highs, previous day lows, like I said, that are valid liquidities in the market, previous day highs and previous day lows. You've also got weekly highs and weekly open, previous weekly highs and previous weekly lows. You got monthly previous candle highs and monthly previous candle lows. These are all valid liquidities. The whole market is liquidity pretty much. But what you need to do is focus on one type of liquidity. Don't focus on all, because that's going to lead to discretionary trading. You need a mechanical, systematic approach to the market that makes your trading simple and an easy rule-based system to backtest and follow. Because setups like this, where you have an Asia low sweep and a reversal back in trend direction, happens a lot more often than you think. And they're very, very easy setups to take. And you'll find that if you keep trading these kinds of setups, you're going to be profitable in no time. So thank you for watching this video. I hope you took some sort of valuable knowledge from my sessions in liquidity. Like I said, when I was a beginner, even 3 years trading, I had so much trouble trying to interpret liquidity. I understood the concept of liquidity and sessions, but I just did not know how to use it properly as part of my toolkit on what I should be focusing on, because I was just focusing on everything, and I was just never a profitable trader. Nothing, like I said, some trades would work, some trades won't work, and then I'll be like, well, what do I do? And then that's when I discovered all I needed was one session, liquidity, and that was it. So again, thank you for your time for watching my video, and I hope to see you in the next one. Goodbye.